Facebook stock drops after missing forecasts. Facebook's user growth and earnings fell short of expectations in a second quarter report, sending its stock prices plunging.
It looks like scandals and privacy concerns are beginning to take a toll on Facebook. The company's stock fell more than 20%, and Facebook's value dropped more than $100 billion in after-hours trading. This came after it released its quarterly report, which missed Wall Street estimates. Joining me now to talk about this, NPR's Laura Seidel. Good morning, Laura.
Good morning.
What the heck happened?
Well, the negative headlines may finally be starting to hurt the company. They didn't report as much revenue as Wall Street was expecting, and they had the lowest user growth since 2011. Now, this is key because Facebook is a social network. That's where its value comes from. And in the U.S., they picked up almost no new users, and in Europe, they actually lost users. And the U.S. and Europe are the company's most valuable markets. So that's where they get paid the most for ads. The company did actually see a 31% rise in profits from a year ago, which would be great for a lot of companies. But Facebook has been on such a rocket ship of growth that it just wasn't enough to keep Wall Street happy.
How come? So you're saying Facebook still made profits, Wall Street still wasn't happy. Make sense of that.
All right, so let's start with some of what was said on the call to discuss the earnings. In the second quarter, the company's growth slowed by 7%, and executives at Facebook say the company is going to continue to see a slower pace of growth for the rest of the year, in part because it may limit the kinds of ads they can see. And in Europe, they've got a brand new privacy law that allows users to completely opt out of sharing their data. And the second thing is that the company says it's going to spend more money on security. CEO Mark Zuckerberg says that's going to have an effect on profits. And now this all ties into the whole scandal where Facebook user data was exposed. You may recall Cambridge Analytica, that's the data analysis and political consulting firm that was affiliated with the Trump campaign. And it collected data through a personality quiz that was put up on the site. Right. In the end, the firm was able to get personal information about some 87 million users. And then the third problem for the company is that all the allegations about fake news going around and going viral on the site. And that led to CEO Zuckerberg having to testify before Congress in April. And while many praised his testimony, it once again kept the spotlight on these problems. And it didn't look like Congress was going to do anything right away, but there's talk that Facebook is just too big and it doesn't face much competition and it's becoming a monopoly. And that could mean at some point in the future, regulation.
I mean, Laura, it's obviously become such an integral part of our culture now, even if the user numbers are slipping at this moment. But is it going to stay that way? I mean, is this the beginning of not necessarily the end, but of less influence in our society?
Well, I mean, you might think that, and, one could think back many moons ago to a social network called MySpace, which kind of disappeared. But despite the slowdown, there's a lot of analysts who still feel very positive about the site. You may recall that this spring there was a big campaign to delete Facebook. There were some high-profile people who claimed they were going to delete their accounts. Right. The entrepreneur Elon Musk, Apple co-founder Steve Wozniak, all these celebrities. But I spoke with a firm called Akltg, which analyzes social media, and they report that most of those people just couldn't do it. They
couldn't do it in the end. NPR's Laura Seidel. Thanks so much, Laura.